Most of us buy and sell our crypto on public exchanges, and it probably feels like that's where the entire market lives. But every day, billions of dollars of crypto are quietly being traded over the counter. This parallel market is where the ultra-wealthy and institutions play. Over-the-counter, or OTC trading, is used when deals are very large. With those volumes, using an exchange isn't always practical, so the buyer and seller handle the trade privately through an intermediary called an OTC desk. Let's say you want to buy 500 Bitcoin. You reach out to an OTC desk and tell them exactly that. The desk then looks for sellers who already hold large amounts of Bitcoin and are willing to sell privately. That could be institutions, large investors, or sometimes the desk's own inventory. When the desk has enough Bitcoin to fill the whole order, it comes back with a single price for the entire amount. If that price doesn't work for you, there's room to negotiate. Once both sides agree, the transaction proceeds. You send the payment, and the Bitcoin is delivered directly to your wallet. Estimates suggest that OTC crypto trading could be 2 to 3 times that of public exchanges. So this isn't just some small corner of crypto, but one of the main ways large amounts of capital move in and out of the market. To understand why OTC trading exists, imagine trying to buy the same 500 Bitcoin on a public exchange. On an exchange, there isn't one person selling all 500 Bitcoin at one price. Instead, there are lots of sellers, each offering smaller amounts at different prices, so your order gets filled piece by piece. You might buy the first batch at one price, then the next batch costs a little more. As the cheaper sellers get used up, you're forced to keep paying higher prices just to finish the trade. By the end, you've paid more than you planned. And it doesn't stop there. Other traders can see that large buy order coming through. Some start buying ahead of you, others raise their sell prices, and the market reacts before your order is even finished. OTC trading is built to avoid this, since the buyer and seller agree on a fixed price for the full amount before any Bitcoin moves. And because the trade is private, the market isn't reacting while it's still in progress. So what does this actually mean for you? It means the charts on your screen are only telling you part of the story. Because OTC trades happen privately, they don't immediately move price, even if billions of dollars are changing hands in the background. But OTC desks also rebalance their inventories on exchanges, and this is one reason why prices can feel stuck, only to suddenly jump or dive later with no obvious warning. The real move might have happened days ago, and the price is just catching up. OTC trading can also affect the amount of available crypto on exchanges, contributing to volatility. When the biggest players stay off exchange, there are fewer large orders sitting on public books to act as a buffer. This leaves the door open for even a small trade to send the price swinging. So the next time you're looking at a chart, remember, you're only seeing the ripples on the surface. The real currents are moving deep below. Interestingly, many of these OTC desks also act as market makers, providing the constant flow of orders, or liquidity, that keeps public exchanges functional in the first place. To see how these behind-the-scenes players manage that balancing act, check out this video next.